Hey, what's up, good people? How you doing? Welcome back to Stock Up with Larry Jones. Listen, this is a video that you need to see, especially if you are a new trader. Okay, let's talk about this market and where I see it going. See you in a second. So let's get right into it. First, this is brought to you by Moo. Go ahead and get that 8.1%. All right, get that 8.1%. It's easy, good people. Deposit $100, get 5 free stock. Deposit $1,000, get 15 free stock and 8.1% on your uninvested money. Let's get right into it. How high can this market go? Let's dive into that a little bit and let's see, because you better have an exit plan. This is extremely important, especially for those of you that are new. You better have an exit plan, all right? So let's just look at a few things as we go into it, and let's do a little research so we can get a little clarity. Let's look at this. Stock market today. Wall Street rises to more records as big tech stock keep climbing. Now, remember that big tech keeps climbing. Now, what does that tell us? That tells us that is the entire stock market climbing? No, you guys have a lot of individual stock that are not doing good, but big tech keeps climbing. So on Saturday, I mentioned that the market, again, I mentioned it again, that it's frothy, it's top heavy, it's expensive. And then I looked and I saw a video. I didn't watch the whole video. But a friend of mine, a colleague, should I say, Stock Curry, made a video, right? And we have two different opinions. I believe he's correct, but to some, he may come off as overly bearish, all right? I'll just be a gentleman about it. But I do consider him a colleague and a friend, okay? And you don't want everybody saying the same thing. You want opposing sides. Now, we do know that this market still keeps going up higher and higher and higher. But why? Okay, so there is a lot that Curry has been saying that is correct, and you need to listen. You can make short-term money right now, all right, but knowing that a fall is coming. Just think about the stock market like this. You're in a hot air balloon. It's tethered, meaning it's tied to the ground, right? You can jump out. Now, let's see, it goes up 5 feet. You can still jump out, but that 5 feet gonna hurt. But if it goes up 10, 20, 30 feet, it's gonna hurt even more. This is the stock market, and this is us jumping out. The higher the stock market gets, the longer the fall you will have with your gains. Always keep that in mind, all right? So now, let's look at this, good people. It's a lot of great information. All right, let's look at what makes up the S&P 500, okay? As we can see, Microsoft, Nvidia, Apple, and Amazon. See here? That makes up the S&P 500. These are big tech, right? So we're talking, about 25% of 500 companies. These 4 companies make up 25%. Let's look at the NASDAQ, because they both had all-time new highs, right? So let's look at the NASDAQ. Look at that. 56% of this pie is technology. See, we have it here. Let's look at this. As of October 31st, 2023, 3,473 stock comprised the NASDAQ composite, spanning all 11, look at this, industry groups. Technology has the most significant weight at 56.75, followed by, you see there, consumer, discretionary, healthcare, blah, blah, blah. We're tech heavy with this run that's going up in the NASDAQ. And as you could see, same thing with the S&P, tech heavy. Larry, why are you telling us this? Because you have to know what you're investing. As we could see here, these are the top 3 dogs right now: Nvidia, Apple, and Microsoft. All right, they're all jockeying for the the $3 trillion company, right? And so look at over the last year how much they have run up. Now, I also want you to start looking at what? The PE, all right? So now, this is, let's just get rid of these two. As you could see here, let's get rid of that. As you could see here, the PE, price to earnings, for NVIDIA is 76.66. Now, the forward PE is actually coming down, right? But that is not necessarily enough. You guys see that? 76.66. That's not necessarily enough. Why? Let's look at the overall PE, price to earnings, of the NASDAQ. And here we go. NASDAQ PE ratio 30.84 for June 17th, 2024. 30.84. Now, for those of you that are old schoolers, we know that the average for any company was around 15, 16, okay? That was a normal PE ratio. Everything is high now. So with everything being high, the entire NASDAQ PE, which is high, is 30.84, okay? But as we go back and look at NVIDIA, it's a whopping 76.66. That's a lot, good people. That's a ton. Listen, I want you guys to listen to this video, and I'm going to explain why I am not scared, but I'm a little worried because things are so frothy and so high. But we have to put into the equation, this is an election year, right? And that is one of the safeguards that we have. So let's give this a quick listen.
How stocks typically perform during an election year and whether 2024 will be different. Our very own Jared Blickery has the breakdown for us.
Let's take a look at what usually happens with stocks. And this goes back 95 years, almost a century of price data here. And the big takeaway is stocks go up. You can see it's from the lower left to the upper right. Not always smooth sailing. Around the September, October period, that's where we have historically a lot of crashes, and that brings down the average. But as you were saying, Brad, we want to see what happens in presidential terms, and this is an election year. And what I've done here, that previous chart went back to 1928. This goes back to 1949, so it is a post-World War II era. If you take a look, what jumps out to me is that February is a negative month, no matter how you slice and dice it here, looking at some average negative returns there. But in January, you can see for all years, well, we tend to average about 1%, but in the fourth year of the presidential cycle, and especially when there's a Democrat, we don't have as many gains. Then we have March and April, and for all the sayings of sell in May and go away, we really don't see that much pressure, although the averages are pretty low. And then we have some strong summer months, June, July, August, and this is where we start getting into the primetime crash season. This is when the VIX kind of explodes some years, because we do have the market crashes, Black October being
So you guys hear that. In the summer months, right? Where we are now, that is the potential, right? But as we could clearly see that it actually ends up higher. Let's keep it going.
That happened in 1987. But in September, we do have average losses for both the overall market since 1949 and the fourth year of the presidential cycle. But when you filter by Democrats only, interestingly enough, September ends up positive. Now, we don't have a huge sample size here, so take that with a grain of salt, but I did think that was interesting. When it comes to October, the average is positive, but then when you get to the presidential cycle, still it's skewing negative to very small gains. But then what sticks out here, guess what? November, usually the best month of the year.
What he was saying was November is basically a good month. So we could see there's a lot that's going on before that. June, which we are now, look at that. Highs, right? Then we literally, if you look at this chart, it starts to kind of cool off, right? September, especially if the election has no clear winner, a lot of volatility, a lot of fear. The market does not like uncertainty, okay? Then October, This is just a trend. Look at that. S&P average returns since 1949. But what happens when the market knows who's going to be the president and who's going to be running our government? Okay? It doesn't really matter who wins, Democrat or Republican. It generally comes back roaring. So this is what we're looking at as an historic average, okay? So that's what I wanted to say. So what are you saying in all of this? I wanted to help you see what normally happens, especially for those of you that are new. And I'm saying that you can, right here, do a little profit taking, okay? So I am tightening up my stop losses on NVIDIA, and I have sold a little Tesla, and I've sold a little Apple, okay? Still keeping some. But as you could see, there is a cool off generally since 1949, all right? And so I may look to repurchase some of those positions right around this time, September-ish, or if we have a flash crash, like in September, and looking to buy here again, right? And then ride it up here. The question is, what about after this? Okay, we'll cross that bridge when we get to it, right? So I'm going to leave it right there because there's a lot of data that we could go into. You make the decision on what's best for you. Anything I say is not a suggestion to buy, hold, or sell. And in closing, I want to bring this up one more time because I know a lot of you guys were in this play, all right? This Palantir call option, these leap options, they skyrocketed today. As you can see, on one I'm up 115%, and another we're up 94%. There are some people that will follow me in this play that got in even way heavier. I got in heavier in my other portfolio. This is the portfolio I made to share with you guys. If you want to make plays like this and win and just have a better understanding of the market. And let me show you guys this while we're at it. I shared it in the Patreon, okay? This is another portfolio that I made for you guys. This is a blue chip portfolio. And as you can see, this portfolio is up. I'm up almost 52% at the bottom there. But I am cash. I am converting to cash. And as you can see, my NVIDIA is doing well. These are, if you look to total gains, these are good gains. This is one of my DCA dollar cost average portfolios, okay? And I'm just sharing it with you. It doesn't matter what size it is. There are people, theirs are 1,000 times more than this, okay? And there's some that are smaller. What I'm trying to do is help bring us all along, okay? So we can make money also, just like the big boys. I want to help you guys, right? But if you really want to learn how to do that hands-on from beginners to advanced, I start you off with where you are. Then you want to download Stock Up You and come join the family. There's thousands of us that learn how. I teach you everything I know with stocks and as a bonus crypto. So you can make money with them both. And these lady and gentlemen came along to help me out, to help teach you guys. I didn't want you to get it from just one perspective. And we are steadily growing, and I'm looking to add even more. All right? All right, good people. I'm going to leave it right there. Hopefully this wasn't confusing. Let me know if you learned just one thing, or if anything I said will help you be a better trader or help you to make a decision. Now, trailing stop losses is another thing that I teach in the class, how to properly set them, when to use a trailing stop loss, a regular stop loss. All of that is covered in Stock Up You. Make sure you download the top 2 links below in the description. We'll see you later.